Good afternoon, everyone. Thank you so much for joining us today to talk a little bit more about student loan repayment and refinancing. Hopefully, this session today will give you a little more information into this interesting topic. And we are just going to go ahead and jump right in. My name is Sarah Scruggs. I am the Community Engagement Specialist at Harvard University Employees Credit Union. And I'll be presenting on the first half of our topic today, and Migdalia Gomez will join us about halfway through to talk a little bit more about the refinancing portion and repayments. So we are glad that you are here today to learn a little bit more with us. To get rid of some housekeeping things early in the presentation, first, we have gone ahead and muted everybody on the call except for our presenters so that hopefully you can hear us clearly, as well as if you need to eat lunch during this or wrangle children around the home, that is totally fine as well. So just know that you're muted, but we hope that this doesn't interrupt any way of you asking questions. This truly is your presentation, so we want to make sure it's open to your questions. There is a questions feature on the right-hand side or the top navigation of your GoToWebinar screen. In this questions feature, you should have the ability to type in something on your computer and send it to us, the presenters, so that we can see. And number one, to make sure you can hear me, and number two, to make sure that you know where the questions feature is. If you could just let me know where you are joining us from today in the questions box. This way, again, I know you can hear me and I know that you know where the questions feature is. So if you could just let me know where you are joining us from today in the questions feature, that would be great. All right, it looks like somebody's joining us from Somerville, Everett, Boston. Okay, great. So it looks like New York, great. Peabody, Chicago, wonderful. We've got people all over the place. Medford, Nantucket, beautiful. Thank you all so much for letting me know. This way we know exactly that you can hear us and you know where the questions feature is. So if you have questions during any portion of our presentation, please enter them into this box and we'll be happy to address those. There will be a recording of this being sent out via email that you provided with your registration. So that way you all can refer back to it if you have questions that come up afterwards. So no need to take notes on what we're talking about. You can go back and refer to the presentation and recording afterwards. There will be a survey that we ask you to fill out for us just to let us know how we did today and how we can continue making these presentations better for all of you. This survey link will be put in the chat as well as in your follow-up email. So please let us know how we did and how we can continue helping and serving you. Harvard University Employees Credit Union is the not-for-profit financial institution exclusively for the Harvard community. All of you on this call are eligible to be members of the credit union through your affiliation with Mass General Brigham. If you are interested in any of our products or services, we are happy to talk about those. But just to let you know, all of you are eligible to become members, as well as your family members once you become a member. We believe that we have everything that a bank has. We just think we do it a little bit better. So if you have questions about our model or anything to do with our products or services, we are happy to answer those questions today as well. Now I'm going to pass it over to Kimberly from Mass General Brigham EAP to speak a little bit more about their services.
Thank you, Sarah. Welcome, and I'm happy to see so many of you on this training today. So my name is Kim Smith, and I'm one of the Employee Assistant Program clinicians. The slide here really does it well and tells you what we do, but we are a free confidential service to all employees of Mass General Brigham. And what we do is we provide assessment, short-term problem solving, and referral to community-based services. Some of the reasons why employees would contact us are listed here. So any personal or well-being, stress or resiliency, increase in depression or anxiety, anything to do with addictions or relationship problems, as well as any workplace conflicts. So we work with managers, we work with work groups, and then there's also family and life services as well. So if you have any questions about resources that we could provide as far as childcare, financial, any elder care. We have a really great new website that we launched about a month ago. It's listed here, eap.partners.org. It's a really great website, a lot of vetted content. You can actually make an appointment with one of our clinicians on the website, and you can also call our 800 number, 866-724-4327 to set up a time to talk with us. We're certainly happy to be partnering with HUE-CU, and we really hope you enjoy this session. And I will stay on until the end of the session today, so if anyone has any EAP related questions, you can save them till the end. Thank you so much.
Thank you, Kim. And we are grateful for this partnership as well. And hopefully this brings you all just another layer of wellness within your life at work, because that is an important piece of the puzzle when we talk about our overall well-being. So let's jump into our topic at hand today, which is talking a little bit more about student loan repayment and refinancing as well. And we really want to start off with the foundation of understanding what types of loans we actually hold. You possibly hold these yourself. Your spouse may hold these, your partner may hold these, your children may hold these loans. So this is great, important information to be able to have, but also to have for those in your life as well. We're going to talk about repayment options and really sit down and think about what may be best for you in your situation. We're going to talk about researching your federal forgiveness and discharge options, including the public service loan forgiveness, and then talking about refinancing as well. So please know that we wish we could tell the future, myself and Migdalia included, about what is to come for federal student loans. But as we've kind of researched and looked into it more, we have a couple of things we want to share with you. But again, Migdalia and myself are not, we can't tell the future for whether there will be total forgiveness of loans or anything of that nature. So we hope to be able to share with you the knowledge that we have and hopefully give you a lot of resources to use so that you know in the future as well how to take care of these loans. We're starting off with step one. Really the foundation of it all is understanding our loans right now. Where are we? Really before we can think about repaying them or refinancing, we need to figure out what types of loans do we hold and what are the expectations set by the federal government or the private lenders on these loans. So there are three different types of student loans. The first is the federal, and these are your direct subsidized and unsubsidized loans. In the past, they were formerly called Stafford loans, as well as the Perkins loan and any plus loans that you might have. You may have a plus loan for your dependent. You may have a plus loan for graduate school. So these are both included in federal student loans. So these are loans specifically given by the federal government for students to go to school. We then have state loans. There are some states that have student loans. There are some states that do not. So it totally depends on where you went to school and if that state provided you with any loan amounts. And those, of course, vary from state to state. And then there are private loans. These are larger companies like credit unions, banks, possibly a university or a school, and other private companies who've offered private student loans. So this means that there's not a one-size-fits-all with these private student loans, and we'll touch on them because we do think it's an important topic, and hopefully will empower you to kind of take control of those private student loans. But what we're going to speak about first is our federal loans, because those do have more of an across-the-board approach to them. So the first place to go if you have never checked out your federal student loans online, studentaid.gov is a great place to go. And right now during the coronavirus, we really recommend that you go to this website that's listed here, studentaid.gov/announcements, events, coronavirus, it will be on the front page if you just go to studentaid.gov. You can click there to get to it. But this has information about how long the 0% interest is lasting. If you're interested, that is lasting until September 30th, 2021. September 31st, I believe. Nope, September 30th. The 31st does not exist. So September 30th is when they will then turn back on the interest as well as payments. So that's something to plan for coming in the future. If there are any updates to that date or timing of those things, they will be on this page. So this is a good page to bookmark if you're wanting to stay up to date with any of the latest information on student loans through the federal government specifically, and any new actions that are going to be taken on those loans. So talking a little bit more about federal loans, there's a few things to know about these loans. The subsidized and unsubsidized loans. There are two different types. They're formerly the Stafford loans. So you might see on your all of your paperwork, you may see that they're the Stafford loans, or you may see that they're direct loans. These are the same loans. They've just changed the name to direct loans. And there's no credit check. So these are in the student's name. The student is the borrower on these loans, which makes them more accessible so that you don't have to have credit to be able to access these funds. And so if you possibly borrowed when you were in college and now you've spent some time away from school, you may still have these loans in your name to be paying off. The difference between subsidized and unsubsidized loans, your subsidized loans do not accrue interest while you're in school, while your unsubsidized loans do. Subsidized loans are only available to undergraduate students. Unfortunately, no graduate student subsidized loans. And there's a certain limit on how much subsidized loan you could possibly qualify for. And you have to qualify for subsidized loans based on some income limits from the information you submitted in your FAFSA back when you applied for these loans. You can defer payment on your federal loans while you're enrolled in school at least half time. So let's say that you went to school 10 years ago, you went to undergrad 10 years ago, and now you're wanting to get your master's and you're going to school at least half time, you would be able to defer payment on your undergraduate student loans while you are in school at least half time. And so know that that is an option for you all so that you're not bogged down with those while you're also possibly paying tuition again for a master's program. After graduating, you do have a 6-month grace period before payments would ever kick in on federal student loans. Of course, you are able to begin paying them whenever you would like to. There is not a mandatory waiting period to pay back your loans. So, and there's not a prepayment penalty on these loans. So you're able to pay them back whenever you are able to within those first 6 months. So you do not have to pay until 6 months after graduation. And your rates are based specifically off when you borrowed the loan. So you'll have, if you went to undergrad for 4 years and borrowed for 4 years, every rate, each year that you borrowed, your rate will be different based on the rate that it was the year that you borrowed. So interest rates today really don't have as much pull on what your interest rate is based on when you went to school. And then there are two more types of federal loans we're going to speak about, and those are the PLUS loans. And these are different for undergraduate and graduate. And so with the PLUS loan that you see on the left-hand side of this comparison, this is sometimes called the Parent PLUS loan. And this is for undergraduate students. So their parents would actually be the borrower on this loan, and you have to complete the FAFSA to be able to apply for this. And the parent would apply for additional funds to pay for their student's school. There is no grace period. The repayment begins immediately, but you can request a deferment. while a student is in school. So this is something that if you're thinking about helping your child or dependent go through school in the future, this could be an option for you, but know that the interest rate does vary depending on when the loan was dispersed, just like the Stafford loans or direct loans. But with this plus loan, it is under the parent's name and there is a credit check for this. So the parent does have to qualify for this. With graduate students, it is in the student's name because normally when you're going to graduate school, you are now an adult at this point, so it is in the graduate school student's name, and there is a deferment of 6 months. Hopefully, in those 6 months, you get a job where you can start paying back the plus loan. And then the last category to speak about is private student loans. In private student loans, you may have private student loans, you may not. There are many options with private student loans. So if you have borrowed through a credit union, you may have borrowed through a large bank like Wells Fargo, you may have borrowed through a private company. But all of these terms that we just spoke about with federal loans, they are going to vary widely from lender to lender. So they'll have different interest rates based on their own rates. Each company probably has different rates at this point in time. The grace periods will differ from lender to lender. There may be some that have a grace period. You may have some student loans that never had a grace period and you were to begin paying on them immediately. And then the repayment terms may be different. The life of the loan may be different lengths if you've worked with different lenders. And maybe you have multiple private student loans with multiple lenders. That is something that can happen. It's important to make sure you understand all of the repayment options and terms for each of your student loans that are with privately held companies, banks, credit unions. There are potential benefits of private student loans. There's cosigner release options. So normally if you are a young student, you may need a cosigner to be able to borrow money. And once you pay back a certain amount on time payments, there is an option for your cosigner to be released from that loan, which they normally like. There is the possible benefit of interest rate reduction with auto pay. So if you just have them take money directly out of your account, there could be a possible interest rate reduction with that. At the credit union, we do offer that with our student loans. So please know that that's a question you can ask your lenders that you do hold student loans with. See if there's a potential benefit in going ahead and getting that auto pay if you're able to. So it's important before you really think about repayment strategies or refinancing options that you know the details of all of your student loans, whether they be federal or private. And we highly recommend that you either have a spreadsheet or possibly a notebook that or a place on your computer that has this information, the amounts of each of your loans, the different rates for each of your loans, as well as the terms for these loans. This way you can keep yourself focused on these student loans in particular, as well as once you do try to strategize the repayment or refinancing, you know exactly what you're working with. So if you have never sat down and really written all of this information out, I highly recommend that you take some time either this weekend or maybe after work this week sometime to write each of these down. And if you have federal student loans, a great place to look for more information is studentaid.gov because they have quite a bit of information there and can give you some help with really working out exactly what student loans you have, what are those terms, what are the interest rates, and really gives you a helpful picture of all those details. One other place to find a lot of these details is your credit report. If you have never looked at your credit report before or downloaded your credit report from each of the 3 bureaus, again, we highly recommend doing this. Annualcreditreport.com If you'll notice here, it doesn't have the word free in the title. It is a .com, but this is the only website authorized by federal law to give you the free credit reports once a year from each of the 3 bureaus, hence the name Annual Credit Report. But because of COVID, you can actually receive a free weekly copy of your report from each of the 3 bureaus until April 2022. Do I recommend that you go look at your credit report every week? Probably not. Once every 3 months is normally what we would recommend. So if you haven't looked at your credit report in the past 3 months, any loan that you have taken out, including student loans, will be listed on your credit report. So we highly recommend that you look here. It will list your payments in the past. It will list the balance left for you to pay off. So that this way you know a little bit more information about each of your student loans. This is a great place to start, and you're able to learn a little bit more about your credit overall from learning more about your credit report. Now I'm going to pass it over to Magdalia to help us a little bit more about repayment options and strategies, as well as refinancing.
Thank you, Sarah. And as a reminder, if you have any questions, feel free to use that questions panel. So there are a lot of different repayment options, and I'm just going to jump right into it so that we can go through some of these. I will start off saying that with the federal repayment options, keep in mind these are, it's in the first word, it's only for federal. Many times folks will ask, well, what about the private student loans? As Sarah showed in her slide not too long ago, it really will vary based off of who you borrowed the loan with. Because federal student loans have more information, that's really where we're going to focus on for the most of our for the rest of the presentation. There are a couple of different repayment options. There's sort of the basic ones, which are your standard. So let's say I borrowed X amount of dollars in student loans. I would be repaid in 10 years, which would be 120 payments. My payments would be the same all throughout. Then you have graduated, which means I'm going to pay a little bit less at the beginning. And as I progress in my career, the assumption is that I will be earning more money and my payments would go up every 2 years or so. Then there's an extended, which can go up to 25 years. Keeping in mind that with extended, your interest rate, the total interest paid will typically be significantly more because you are extending. So most of your payments at first are really just going towards interest. And then you have income-based repayment options. There are many different ones. I'm not going to go into the specifics of these because of the fact that not everyone will qualify for these. In the chat I put earlier, the website for studentaid.gov, you can actually go in there, log in, put in your information, and you'll need your federal student aid, your FSA ID, and your FSA PIN. If you don't know it, no worries, you can just reset it. But you can go in onto the federal student aid website and get essentially information customized to your federal student loans so you could see what loan options you would qualify for. I will point out that for public service loan forgiveness, at least as of today, we know that things are possibly going to change. There's been a lot of conversation about either consolidating all of these income-driven plans into one or changing them in some regard. As Sarah mentioned, we wish we knew what the future entailed. We don't, but we do know that there's a lot of conversation about not only public service loan forgiveness, but also income-driven plans and not having as many options as you see here, but possibly making it much easier for folks to qualify and also just be on one income-driven plan versus having 5 or 6 different options. I will say for income-driven plan, if you do qualify, you will need to provide documentation. So usually it's your pay stub or your tax return every year or so, and that it makes sense. It's income driven, so they want to verify that if your income has changed. So that is something just to be mindful of. Then you have, in addition to all those different repayment options, you also have deferment and forbearance. Now, these apply both to federal and federal and private student loans, but the specifics will vary based off of if it's federal or if it's private. You have a federal deferment, which automatically will apply if you're enrolled at least half time in school. That is why when you're a student, you're not paying, as long as you're at least half time, you're not required to repay your federal student loan. So that's one option. Even though it says federal deferment here, a lot of private loans will also have that option that as you're enrolled, you do not pay. And I know this is a student loan repayment session, so why are we talking about being in school? Because we know that some folks may go back to school. Maybe you're taking 2 classes, or depending on the institution, you may be taking enough to be considered half time. And in those situations, that payment is not required. Then you also have the forbearance option. So forbearance, if you don't qualify for deferment, that's typically when forbearance would apply. Deferment isn't just for when you're enrolled at least half time. Deferment could also be applied when in a couple of other situations, if you are if you're working for certain employers, if you've had an income change, a significant income change. So there are other ways that you can qualify for deferment or for that loan pause in both private and federal loans. If you are in need of a deferment, I always recommend contacting your servicer, and the servicer is who you are paying your federal student loans to. And that information you should have readily available. If not, you can go to that student aid website and be able to identify who your servicer is. But let's say that you went through all the repayment options that we talked about in the previous slide. You went through and you looked for deferment, and you just don't qualify for either. Or maybe the income-based payments, it's still not doable, and you're just not able to make payment. In those situations, you have the option to talk about a forbearance, which will temporarily postpone your repayment. Right now, that's not an issue for any federal student loan borrower, really, because the rates are now at 0% temporarily. But when those rates go back up, if you're in a situation that you cannot make payment, that is an option to go into forbearance. However, with your just postponing the payment, that interest is still accumulating. A lot of times people will do a forbearance and they'll sort of put it off making the payments for a little bit longer than maybe what they could. So maybe they're able to pay it a little bit earlier, but they choose to defer it or put it in a forbearance for longer. And that could have a significant impact on the total interest that you're paying. Because remember, you're not making payments. The interest is not paused. You're just not making payment. So, but that interest is actually going to continue to accumulate, and it's going to be added to the principal, which will then make it so that your payments, when you do make the payments, won't help bring down that principal as much. I mentioned this not to say that forbearance is not an option. It's definitely an option for folks that do not qualify for deferment. It's an option for those that the other payment options do not fit into your finances. I mentioned the forbearance piece just to keep in mind. You want to try to keep that as short as possible, because if you don't, that interest will, it accumulates pretty quickly, especially if you have a higher loan balance. So why are we talking about like all these different repayment options, deferment, forbearance? We're sort of talking about this to let you know that there are options should you not be able to make payments. Because if you miss a payment, the consequences, they're not ideal. It's the federal government. They know where we work. They have access to our refunds. They have access to our wages. So they can literally intervene payments that are coming towards you, whether that's your wages, your tax refunds, Social Security benefits, and other income. The federal government could literally retake the payments that are owed to them. It also can impact your ability to borrow in the future, have a significant impact on your credit score. A lot of the individuals that we have worked with, typically their credit score will be impacted because they haven't been making student loan payments. So it's definitely an impact. And as I talked about before, it does increase the amount that you have to repay if you're not making those payments. So what are some things, or what are some strategies that we're going to talk about now to really help you be in a better situation? Because we don't want, we want to avoid being in that situation. And thank you. I do see a couple of questions that have come in. Feel free to continue bringing those, submitting those. I will take a moment shortly after going through this section to address some of those questions. Another option that you have, these are some that have actually been in the news recently. President Biden did talk about discharging some loans. That was actually the closed school discharge. So that's why he was able to do that. If a school has closed and the student had loans from that school, that is why those student loans specifically were discharged. There's also teacher loan forgiveness, unpaid refund discharge, a lot of different options here, which I'm not going to go into the detail because these are very, very specific and do not apply to most people, especially not on today's webinar. So I'm actually going to you'll get an email with this information. You'll have access to the PowerPoint. Sarah will drop the link in the chat, or I can drop it so that you have it. I will really focus on public service loan forgiveness because that's really where I'm starting to get a lot of questions about public service loan forgiveness in the chat. So I'll just focus there. But I'm just going to drop this in the chat so that you have it. For the previous one, should any of those actually apply to you? Again, not as common that the discharge would apply, but there are some situations in which it may. Oops. And part of the delay here, as I copied and pasted, I just dropped that in the chat so that you have it regarding the other options. Now, public service loan forgiveness, PSLF, this one is all over the news. This is the one that most people log on to today's webinar to talk about this one. I'm going to start off with what it is today, what it's currently at, and then we'll get into some of the things that may change, but we don't quite know what will happen. But as of today, public service loan forgiveness means that you can have your loans forgiven if you have made 120 qualifying monthly payments. Let's break that down. A qualifying monthly payment would be if you are in an income-driven plan, an income-based plan, the ones that we talked about previously. And if you weren't in one of those, there have been able to make some exceptions in the past if you weren't in an income-driven plan. So there are times that if you weren't in an income-driven plan, some of those payments can count. But typically, and it's just the math of it, if you're in a standard repayment, keeping in mind that was the 10-year, you're paying off your loans in 10 years, then you wouldn't have 121st payment to be canceled because it's you would have made 120 payments. Now, that's typically, again, why the standard doesn't apply. You can switch payment plans, so you can go from one to a different, but in order to qualify for the PSLF, you would need to have those typically an income-driven plan, and it would be after you make 120 monthly payments. Keeping in mind, $0 payment can actually be considered a qualifying payment. So if you are in an income-driven plan, aren't able to make payment, zero can qualify. Then, as I mentioned, that repayment plan has to be income-driven. I also want to go back to the monthly payment for a moment. They don't have to be consecutive. So you could actually make 100 payments and then maybe you take a pause, you weren't able to make payment, then you make 10 other payments later. Like, it doesn't have to be 10 years specifically. For most people, yeah, you might make 120 payments, that would be 10 years. But if you started in standard and then went into a different payment plan, it could be that you're making those payments for over 10 years. They do not have to be consecutive. They do have to be on time, and on-time payments qualify within a 2-week period. So even though it says on time, you still have a grace period. It doesn't have to be. I wouldn't recommend, though, taking advantage of that grace period. I would say try to make sure you make your payments on time, because not making the payments on time could complicate this and also impact your credit score. So you always want to try to make the payments on time. But if you did not make it on time and made it fairly close, that could still potentially count as a payment towards public service loan forgiveness. And the other piece, you would have to be working full-time for a qualified employer. For everyone on this call, you most likely are in a qualified employer because of you being part of MGB. But if you're not quite sure, you can contact the HR office. Kimberly is on, so maybe she may have some information about if EAP completes the form, or typically how, which office you would go to complete the form. But there is a form that your employer would need to complete. It's very simple. They just verify your employment. Also, you do not need to be at the same employer when making all 120 payments. All three of these have to apply, but you could have been working for MGH, then you went to BWH. As long as you were still working full-time as defined by that employer, then you would still qualify. So that doesn't mean that you have to stay with the same employer for that entire time period. There's a lot of information. There's so many different details. And I definitely appreciate all the questions that we're getting about this. I'll take a moment shortly. The biggest advice that I would have, at least today, bookmark this page. I'm going to send it in the link so that you have it, but bookmark this page. And if you're not quite sure where you fall into public service loan forgiveness, they have this amazing new tool. It tells you about PSLF, but it also gives you specific information for based off of your federal student loans. So there's definitely a tool. I just dropped it in the chat. Bookmark this page, take some time today and utilize the actual tool so that you can see what options. There is an employment certification form, I should say, that you can complete, have your employer complete. That way you can start seeing how many of the payments that you have made would qualify towards public service loan forgiveness. That does not mean that you're applying for PSLF. That's another process. But in the meantime, you could complete the paperwork so that the tracker, if you will, of how many payments you've made can begin. Okay. So before I go into refinancing, I'm just going to take a moment and answer a couple of questions that came in about loans before I talk about refinancing. There was one question that came in. Okay. I had federal student loans that were consolidated into FELP loans. Okay, so FELP loans are still federal loans. So those would still be federal loans. They were managed by a private company, but they were always federal loans. And this is, for those that are on and may not be familiar with FELP loans, those were pretty, I want to say, maybe at least around 15 years or so that they stopped. I forget the exact date, but they haven't been around for some time. But that was when the federal student loans were essentially managed by private companies. That has changed, but those loans would still remain federal student loans. So the benefits that we're talking about would still be applied, even if they were once FELP loans. There are a couple of different nuances with the repayment options that are available, and also whether or not you can consolidate. But all of that information is on the student aid website, but they are still considered federal student loans. Another question that came in. Okay, a good one, yes. Regarding PSLF, are loan holders able to enroll retroactively? Yes, you are able to. If you have been working for MGH for the past 5 years and have not done this, you can complete that employment certification form, which is on that PSLF toolkit that I sent most recently in the chat. You can still go there and have those payments as long as they were with a qualifying employer, you were working at least half time, as long as it was one of the income-driven plans, or they make an exception for the other type of repayment plans, then you can still, and that the payments were made on time, you can still have those payments qualify. So and I'm just going to make up numbers, if I have made 20 payments and I haven't done the paperwork, when they do the paperwork, those 20 payments would count. So the next payment I make would put me at 21, and I'm trying to reach that 120 payments. I will say with PSLF, Public Service Loan Forgiveness, one of the benefits of it, in addition to your loans being forgiven, was that it was being forgiven tax-free. This has actually recently, President Biden has made changes so that, and I forget the exact date, Sarah may be able to drop it in the chat, or feel free, Sarah, if you remember the year, but even if your loans are forgiven for another way, outside of public service loan forgiveness, I want to say it's through 2025, but I don't remember the exact date, the year, they won't be taxed. And that is really the benefit. In the past, if loans were forgiven outside of public service loan forgiveness, let's say that they were forgiven, had $10,000 forgiven, that would actually go on your tax return. So you would be taxed on that forgiveness. That's why one of the reasons that public service loan forgiveness has always been more favorable, because that had never been the case. So if you have your loans forgiven, you're not having to pay taxes on that.
That's through the year 2025. So if they're forgiven up until 2025, they will be tax-free.
Thank you, Sarah. And I would say another question that came in, should you wait? I wouldn't wait. I wouldn't wait to see what the administration does, because whether or not you're not eligible to apply for the program yet, you're essentially verifying your eligibility, your employment, and your payment eligibility. You're starting the clock, the counter towards the payment. I would still do this. In the past, with federal student loans, when they have made changes, people that are already in the program tend to get the benefits. With so many things that have happened, I don't think federal student loans are they're all over the news. I'd be very surprised if they made it so that less people would be able to get the benefits. So there are some talk, though, for possible loan forgiveness outside of PSLF, but that would be for undergrad. That would not be graduate. It would be a different program. And again, we just don't know. There's so many different steps that are involved. So I would still I would still complete the employer certification piece and get started so that you can see how many of your payments. Another question that came in, is Navient considered private? So Navient is one of the loan servicers for the federal student loans. So they, depending on the loan that you have, but most likely if it's with Navient, it probably is a federal student loan that you have. I will see if I can find the link, or if not, we will include it. But there's a link on the student aid website where you can see all of the different servicers and have their contact information and have a better idea about who they are specifically. And actually, I just found that, so I'm dropping that in the chat as well for you, so you can learn a little bit more about the federal student loan servicers. Another question, if you go into forbearance, does this affect your credit score? So with forbearance, it should not impact your credit score for missed payment, because the lender would essentially be saying that you're not required to make payments. So you're not missing a payment, you're not delinquent on a payment. However, it could impact your credit score if the amount of your total debt continues to increase, because at some point your debt is going to continue to increase. And let's say that all other debt that you have remains the same, but if you're not paying your federal student loans, that's going to increase the debt amount that you owe, and it could impact your debt amount, which could then negatively impact your credit score. So 2 parts to the question. Forbearance will not impact it due to a delinquent payment, but it may impact it based off of the total amount that you owe, that you have outstanding. And Sarah and I will share a resource shortly about where you can get more information for credit counseling, and you can also do free federal student loan counseling. Another question, is this for student loans in student's name? Everything that we're talking about is based off of the borrower. The borrower could be the parent or it can be the student. So anything that we're saying would apply to whoever borrowed the loan. Another question, can you make up any gaps in payments? Yeah, you can continue to make payments. If you've only made 100 and still need 20, you can still do that. And then after you hit that 120, that's when those loans would be forgiven. Another question that came in, if I was making payments under standard and now am applying for PSLF, would these payments qualify? This is where it depends. I don't know if recently they have done this, but if they've changed it, but there was a time that they made exceptions to consider standard payments. I would apply and see through that PSLF toolkit. Okay, so I know a couple of questions are still coming in. I'm going to keep going with the presentation and then we'll continue to take questions at the end. So we talked about the different repayment options, the different type of loans. For some of us, PSLF may not make sense. Maybe you're really close to paying them off. Maybe you don't have federal loans, so you have private and that's not an option. Refinancing may be a good option for you, but let's talk a little bit more about what refinancing is and understanding the different pieces. So what exactly is refinancing? Refinancing is, let's say that I owe $10,000 to a private student lender. I have it at 8% with company A. Company B is offering a 5% interest rate. I can take my $10,000 loan with company A at 8% and bring it to company B at that 5%. The benefit is typically the lower interest rate. That's why most people will do a refinance. It's the same as you would refinance a house, you would refinance an auto loan. You're looking for the lower interest rate, which means more of your monthly payment would go towards the principal, or if you keep the same, actually more of your payment would typically go to principal, and there are a couple of other strategies that I'll share shortly. With refinancing, there's typically no application fee, no prepayment penalties. This is refinancing. This is different than federal consolidation. Federal consolidation is when you take your federal loans. So let's assume for undergrad, we went to school for 4 years. We had sub and unsub. In those 4 years, you took sub and unsub each year. So you have a total of 8 separate loans. Sarah mentioned earlier that with subsidized and unsubsidized loans, your interest rates will vary based off when you borrowed. As a result, you may have 8 different loans. That's very common. Instead of having 8 separate loans, you might say, well, I don't want my payment to be divided into 8 loans. I'd rather just have 1 loan. You could do that with federal consolidation. Keep in mind, if you are applying for, or if you're going to apply for PSLF, if you have already made 100 payments and then consolidate, that is now a new loan. Those 100 payments will not count because now you have a new loan. So I would highly encourage you, if you are considering consolidation, I would contact your servicer, make sure that that you haven't had any payments that went towards PSLF, or maybe you only made 2 payments and you're like, you know what, I'd rather just consolidate and lose those 2 payments because they're only 2 payments. But if you made 100 payments, maybe better off waiting, make the other 20, and then have the loans forgiven. But if you're not applying for PSLF, there may be reasons why consolidation may make sense for you. So before you do refinance, and again, the refinancing is for private, it's what you could do with private or federal student loans. It's not consolidation. Federal consolidation is only for federal student loans. Refinancing, you could take private and refinance all of your private loans. You can take federal and private. So you can take any student loan, anything that falls under student loan, and refinance those. Before you refinance, you want to take a look at interest rate. It is typically based off of your credit score. So having a higher credit score is more favorable. If you're not sure what your credit score is, I'll give you information on the next slide to get information on bringing up your credit score. The benefits piece is the biggest one. Anyone who previously refinanced, so if you had a federal student loan 3 years ago, you refinanced to a private lender, you currently are not getting that 0% interest rate from the federal government because it's no longer a federal loan. It's just like when you move from one apartment to another or one home to another, you cannot go back to that old place and use the dishwasher or use the laundry machine or whatever benefit or perk that place had because you're no longer there. You're no longer paying rent. Same concept with benefit. You lose that benefit. So right now, if you have federal student loans, I would not recommend refinancing, bringing them over to the private sector. We just have no idea what the federal benefits are going to be. We don't know. I mean, look at where we've been. It's going to be over a year, almost a year and a half of 0% interest rate. That had never happened before. So we just don't know what's going to happen. If you have private student loans, you may want to wait and see, or you may want to refinance depending on what your rates are. Also, when you refinance, your repayment typically will begin right away. So not a good option usually. If you are graduating, let's say you're in a program and you graduate in May, and you have, and let's say pre-COVID times, and you were expected to make payment in November. If you refinance, you would make payment 30 days, typically 30 to 60 days after you refinance. So you would lose that grace period that Sarah mentioned earlier. So it's not, there are sometimes it may make sense, but typically if you're going to refinance, waiting until that deferment period is almost over typically makes it a little bit easier. I know that we talked about a lot of different information. We talked about credit, we talked about budgets and how, trying to find the right payment. And, we spent almost an hour talking about just student loans. We have a great benefit. As we mentioned, we are Harvard's not-for-profit financial institution. So that means that anyone that's on today's webinar, you're eligible to become a member and you're eligible to take advantage of the benefits that we offer, including counseling with Green Path Financial Wellness, and they are now providing free student loan counseling, federal student loan counseling. If you have a loan with us, I know some people may have HBCU loans specifically, that would still be through us at HBCU. But if you want to talk to someone specifically about your federal student loans for free, that is an option that you have. You would just call Green Path and mention us as a referral. And I want to show some numbers. Sometimes it just helps, set so many words, so many charts. Let's look at the numbers. This is a repayment strategy, and just seeing how all the little things that we talked about can make a difference when it comes to refinancing. So if we have a loan at $40,000 and 8.5, which is, I want to point out, that's a really high interest rate. So if you have anything over 5%, that you can probably get a lower rate. And I'm speaking more towards private right now because I, again, don't recommend refinancing federal student loans because they are at 0%. You're not going to get anything better than that. So if you are at 40,000, let's say that you're making about $552 a month. The total interest paid, not including any previous, so this is assuming that's when you're starting, would be about 16,000. This total interest paid is what I recommend you utilize when comparing repayment strategies, refinancing strategies, not just for student loans. When you're thinking about refinancing a car, a home, you want to figure out what is the cost of that loan. And that cost of the loan is the interest paid. So it's a good point of reference when you're comparing options. Now, if you're able to reduce your rate by 3%, which may seem like a lot, but it's very common. We've seen a lot of people that have, especially if you've had student loans for a while, then your monthly payment would go down and your repayment term typically is expanded. So in this case, a couple of things I want to point out. One is that even though it is it went from 8.6 years to 10 years, the total interest paid is still $4,000 lower. Another piece is that the monthly payment is now lower, which means you have more cash flow available to you. But if you're able to continue making the previous payments that you're making, that's going to help you pay off the loan even faster in 7 years, 7.5 years, and you would save almost half of the interest had you done nothing and kept the loan at its current terms. We use our calculators. Oh, actually, and I forgot, there's one more. You can also increase the payment if you are able to. And this is something I always recommend with any type of debt repayment. $552, if you're able to do it at an additional $23, in this case, it's going to save you about $500 and it saves you about half a year. So if possible, even if it's a couple of dollars here and there, it can make a huge difference. We use our calculators on our website. There are so many different calculators out there, but if you're welcome to utilize ours. We also have a student loan repayment handout that's available that has this information and more. And these handouts are all available on our website at hbcu.org/hub. You can download all of these whenever you are interested in learning a little bit more, or if you want a quick activity to do. And I also want to point out that we do have a survey. It is really helpful if you could help complete this to provide us with some feedback so we know how to improve. We are always looking to add additional resources. We have our webinars that we're recording. You have one-on-one financial counseling available to you through GreenPath. You also have the flyers that I mentioned. But if there's something else that we can create, let us know. That is why we're here, to help you and others in our community. I know that there was a lot that we went through. So a couple quick next steps. Before you go on to the next part of your day, I recommend some pen and paper, write this down, do the flyer if you're not quite sure what loans you owe. But the other piece that I would say is put a date, like say, okay, I'm going to complete that student loan repayment chart, or I'm going to determine how much I owe exactly by Saturday, by next week's Sunday, whatever time works for you, time frame, just putting it on the calendar. Research the student loan forgiveness options, and also stay, there's so much happening with the news right now. Keep an eye on it. Keep an eye on that website that we sent. A lot of things are probably going to happen between now and September. We just don't know. So I would be aware and maybe wait until you do anything major with your student loans before refinancing or taking them out of the federal student loan portfolio. And then calculate refinancing savings. It may be a good option for some of you. It may not. It really will depend. If you don't qualify for public service loan forgiveness, let's say that you have federal student loans and you have like $5,000 left. That public service loan forgiveness option may not make sense, because to pay $5,000 off over 10 years, you might decide once the rates go back up, you might decide to just refinance with a private lender, get a lower rate, and be done with that loan faster. So you really have to crunch the numbers and understand your situation, because there are a lot of great benefits, but just like anything in life, benefits are specific to the person, and what may work for someone else may not work for you. I do want to point out that our presentations are meant to be educational in nature. We cannot provide tax or legal investment advice. We just don't know your situation. As I said, everything is so personal. There's so many different pieces. So we provide you a lot of different resources to help empower you so that you can make better choices on your situation. Okay, a good question that came in. Do we recommend making payments from now till September for the federal student loans? Thank you for asking that. If you are able to make payments, because that interest rate is at zero, the payments you're making now are going, assuming you've paid off all the interest, it's going to then go to principal. So if you are able to make those payments, that can help you pay off that debt significantly faster. So I would recommend continuing to make those payments if you are able to. I will say, for those that have not been making payment, start, I know it's gonna sound odd to say, but start practicing making those payments, start maybe saving that money, because to go from not making payments to then make a $600 payment or $500 or $1,000, depending on your student loans, it can make a huge difference on your budget. So if you can make the payments earlier, it will help you. Here's our contact information. I don't know if Kimberly, if there's anything else you wanted to say, but thank you everyone for joining. I'll be on if there are any additional questions.